A daring move. The U.S. freezing China's assets. The United States holds significant power in the global financial system. One tool at its disposal is the ability to freeze assets of other countries. Imagine the U.S. taking such action against China, freezing its foreign assets. This would be a drastic step with far-reaching consequences for both countries and the entire world. The move would send shockwaves through the global economy, disrupting trade and financial markets. China, as the world's second-largest economy, holds trillions of dollars in U.S. assets, including treasury bonds. Freezing these assets would be a major escalation of economic tensions between the two superpowers. The immediate impact would be felt in financial markets. Stock markets would likely plummet, and the value of the U.S. dollar could fluctuate wildly. Businesses with significant exposure to China would face uncertainty and potential losses. The long-term consequences are even more difficult to predict, but could reshape the global economic order. The potential freezing of China's assets highlights a growing trend in international finance, de-dollarization. This refers to the efforts of countries to reduce their dependence on the US dollar for trade and financial transactions. The US dollar has long been the world's reserve currency, used for everything from oil transactions to foreign exchange reserves. However, this dominance is being challenged. Several factors are driving de-dollarization. One is the increasing use of sanctions by the US. When the US freezes assets or imposes sanctions, it forces other countries to find alternative ways to conduct business. This has led to the development of alternative payment systems and the use of other currencies for international trade. Another factor is the rise of emerging economies like China. As these economies grow, they are seeking a greater role in the global financial system. This includes reducing their reliance on the US dollar. The potential for the US to use its currency as a weapon only strengthens the resolve of these countries to find alternatives. The desire to circumvent US sanctions has led to the creation of alternative financial systems. One notable example is Instex, the instrument in support of trade exchanges. This European-led initiative was established in 2019 to facilitate trade with Iran, bypassing US sanctions. Instex allows for non-dollar transactions, effectively creating a parallel financial system. While initially focused on Iran, Instex represents a broader trend of countries seeking ways to conduct trade outside the traditional US-dominated system. China, Russia, and other countries have also been developing their own payment systems and promoting the use of their currencies for international trade. These alternative systems are still in their early stages of development. However, they represent a growing challenge to the dominance of the US dollar and the SWIFT system, which is used for most international transactions. The more the US uses sanctions as a tool of foreign policy, the greater the incentive for countries to seek alternatives. The prospect of a world where the US dollar is no longer the dominant currency raises questions about which currencies could potentially take its place. The euro, the Chinese yuan, and a basket of currencies are all potential contenders. However, each faces its own set of challenges. The euro is used by a large and relatively stable economic bloc. However, the eurozone's political and economic challenges limit its potential to fully replace the US dollar. The Chinese yuan is backed by the world's second-largest economy. However, China's strict capital controls and lack of transparency in its financial system are obstacles to wider international acceptance. A basket of currencies consisting of the US dollar, euro, yuan, Japanese yen, and British pound could offer greater stability and diversification. However, managing such a system would be complex and require significant international cooperation. The transition to a new global reserve currency would be a gradual and complex process. It is unlikely to